Welcome to a quick country profile on Zambia, a country that's heavily dependent on the extraction and exporting of copper. So Zambia is a large landlocked resource-rich country, which is fairly sparsely populated in the centre of southern Africa. Shares its border with countries such as Angola, Malawi, Mozambique, Tanzania and Zimbabwe. And they serve as the main expanded market for their goods. Here's a picture of Lusaka, the capital of Zambia. I think one of the most important aspects of this mini case study, and a really key part of economic change in Zambia, as with many other African countries, has been the increasingly strong links with China, not least as a source of external finance for investment. So that's one reason why I've chosen Zambia for this quick country profile. A quick bit of background on the Zambian economy. It's a small, lower middle income nation, as I say, heavily dependent on copper. It's about, two-thirds, possibly three-quarters of their exports are linked directly to the copper mining industry. And their GDP is actually really small. It's only around $20 to $22 billion per year. And they're growing at around 3 or 4%. Which is a pretty low rate given their population growth is close to 3% per year. So per capita incomes, of course, therefore remain low. It has been growing, but as we'll see in a few minutes, they have big, substantial growth and development barriers. Some of these are mentioned here. First of all, very high level of absolute poverty and inequality. So more than 60% of their people earn less than the new poverty line of $2 per day, $2.15 a day, PPP. About 40% of people in sub-Saharan Africa live below $2.15 a day. So in Zambia, it's 60%. And there's a very substantial urban-rural issue. 3/4 of the poor live in rural areas. High unemployment and underemployment. Critically for Zambia, a very large, relative to the size of its economy, a very large external debt. And China is Zambia's largest creditor, about 30% of outstanding debt. They also have big loans to private investors, including BlackRock. The Zambian currency is weak and volatile. I mean, it does have good years, but it has bad years as well. And their currency, as well as their trade balance, is strongly linked to the world price of copper. Hopefully you can think about the theory behind that. Again, for a small economy, a small country, they have a very high level of government debt. Despite debt relief about 15, nearly 20 years ago, Zambian government debt is now well over the size of their economy. And indeed, they defaulted on some of their external debt after a collapse in government finances during the pandemic. I think they're one of the first African nations to default since the pandemic started. Infrastructure gaps are a problem, as there are in many low-income countries. They have hydroelectric plants that have been hit by severe water shortages. Their economy does have ambitions to try and move away from this direct dependency on just copper mining. They want to become a significant manufacturer of e-vehicles and batteries. Whether they have the capabilities and capacity to do that is open to question. But they've also invested heavily in solar power generation to try and scale up renewable energy. So there's the GNI per capita. Keep in mind, of course, you need to understand what PPP means. But a per capita GDP adjusted for PPP of just over $3,000. The Gini coefficient, I'm sure you know that as a measure of income inequality, is 0.57. That's one of the highest in the world. Pardon me, any figure above 0.4 is high, but 0.57 takes Zambia right up into the league table of the countries with the most income inequality. And as I've mentioned before, 61% of their population are living on less than $2.15 a day PPP. Unemployment, well, it has come down a little bit, but it's still quite pretty high, 13%. And of course, in countries such as Zambia, there's a lot of hidden unemployment and underemployment, particularly in rural areas. Inflation, they've really struggled to get inflation down, particularly with a weak currency. They have ambitions to bring inflation down to somewhere between 6 to 8%, but it's currently around 10%. And again, think about why high inflation could be damaging for a developing nation such as Zambia. Of course, with high inflation comes high interest rates. The Central Bank of Zambia has set policy interest rates at the moment at 9.25%. And we have discussions in the UK, don't we, about 4.25%, but in Zambia it's even higher than that. And critically, actually that government debt figure is now much higher than that, but they have a level of government debt more than the size of their economy, with a bond yield, as we've seen in a few minutes, of over 30%. So essentially what the Zambian situation, as I see it, is that they have grown recently, but the growth has been too slow, too low, to really bring down extreme poverty and drive reductions in inequality and things like malnutrition. These are some of the highest in the world if you look at the child stunting data. And Zambia is a country that, for a small country, has a high level of debt. So it's a country that's in debt distress, and that's not sustainable. So here's the Zambian growth data. As you can see, it's quite volatile. This is just the GDP, real GDP growth since 2013, just the last 10 years or so. And growth averaged about 4% from 2012 to 2019. But then you can see that big fall in GDP. The economy of Zambia fell into a deep recession, a really deep recession, due to the adverse impact of the COVID pandemic. And of course, they weren't the only country where that happened. Rebound in 2021, but growth hopefully now picking up. Can that be sustained? Now, here is the trade profile for Zambia. This is just for goods, trading goods rather than services. But you can see here a low level of economic complexity, very high dependence on copper, the extraction of raw copper, the refining of copper and related industries, a little bit of a tobacco sector, a little bit of exporting of electricity there. There is relatively small. I mean, there's not much in the way of manufacturing there, is there? And heavily dependent on trade with China. Presumably the gold exports to Switzerland are significant there. So Zambia has a low level of economic complexity, an economy driven by, dependent on copper. Now, as a result, the balance of payments. So Zambia relies heavily on copper exports, big part of their GDP, huge part of their exports. Of course, that makes the country vulnerable to fluctuations in the world price of copper. So the Zambian external balance, the current account, is volatile, as this chart shows. When world copper demand and prices are high, they can run external surpluses, as they did in 2010, 2011, and again in 2020. But the balance can also move quickly into deficit. The crucial point, I think, really, the reason why I've chosen this is a little mini case study, is what's happened to government debt in Zambia. So the Zambian economy has suffered from a growing debt crisis. Now that is both government debt and external debt, and there's quite a bit of overlap between the two, because the government has borrowed heavily from overseas to try to fund infrastructure projects. So much of the debt is issued by the Zambian government to try to drive their growth. Essentially, Zambia had debt relief in 2006. The Highly Indebted Poor Countries Initiative reduced their public external debt. But then the Zambian government went on a borrowing spree, had big issues of bonds, big splurge on Chinese-backed infrastructure investments projects, increasing their public external debt up to about $20 billion. And keep in mind, of course, that their economy is only worth $22 billion. So they've got a huge level of government debt and external debt, as this chart shows. And critically, the interest payments on that debt are huge. So this is the yield on 10-year Zambian government bonds. Now, they rise and fall, but critically, look at how high they are. Currently 30.5 or 30.6% yield. Now, why is this? Well, two main reasons. One is currency risk. The kwacha, the Zambian currency, depreciated, I think, like that 30% in the last sort of year or so. So if you're a foreign investor buying Zambian government debt, there is a big risk when it comes to currency. And secondly, the default risk. The Zambian government did default on some of their debt in 2020 and sought a bailout from the IMF. So that's one reason, those are two reasons why when the Zambian government borrows, they have to pay a very high yield on their debt. Okay, so debt relief is really important. The Zambian government has sought to bail out from the IMF, and critically, there's now a debate about whether countries and governments such as Zambia should be given some debt relief. Clearly, if you have a very high level of external debt, it can lead to crowding out. So the debt service payments take up a bigger and bigger share of government spending, of government revenues. There's less money for investment in infrastructure, education, basic healthcare services. So this is a really, really important issue, whether or not we should, go back a slide, so whether or not countries such as Zambia should be given another round of debt relief to help them emerge from the impact of the pandemic and put their government finances on a more sustainable long-term footing. But one of the issues is corruption. So corruption and weak institutions are undoubtedly in Zambia big obstacles to economic development. And this is the data from the Transparency International corruption rankings. The higher the ranking, the worse is the corruption. So Zambia, as you can see, has gone up from 76 in 2015 to 116 amongst nations. And corruption undermines the rule of law. It reduces trust, people's trust in public institutions. Corruption undoubtedly discourages inward investment. And Zambia has indeed established an anti-corruption commission to try to address the failings of the previous government. And indeed, a lot of the corruption is linked to politicians benefiting financially from doing loan deals with overseas multinationals. Big issue in Zambia is corruption. So if you're revising for your exams, why might Zambia be a nice little applied case study just to have in your notes ahead of an exam? We're not looking here for encyclopedic knowledge of Zambia. We're just thinking, right, how can I use Zambia as a good example of a country that I can bring into various essays? First of all, primary sector dependence. So it's heavily dependent on copper, both the extraction, a little bit of refining and the exportation of copper. So their balance of trade, their external trade, their terms of trade, their growth rate is so strongly linked to the world price of and production of copper. Can Zambia diversify their economy into tourism, into light manufacturing and so on and so forth? That's really key to their growth and development path going forward. The consequences of corruption we've just mentioned, haven't we? Including malinvestment by the government in poorly costed infrastructure projects. So government failure. You could use Zambia as a good example of government failure. Very heavy reliance on external debt. So Zambia is a low-income country with a savings gap, very low savings as a share of GDP, and therefore reliant on external debt, money borrowed from China. They do get remittances coming in. It's worth about 1% of their GDP. But essentially, this is a country that's become very dependent on borrowing money from overseas, especially from China under the Belt and Road Initiative. And what about the consequences of debt default? Zambia defaulted on debt in 2020, and the consequences then ripple through, don't they? They don't just stop when you default. When you issue new debt, the yield you pay, 30% on new bonds. And often when you get that bailout from the IMF, they insist on fiscal austerity, cuts in government spending, cuts in spending programs, which then have a direct effect on people's lives. Zambia, good country to think about whether a country such as Zambia should receive some form of debt relief or debt cancellation. It's a good country to think about the benefits and costs of a big depreciation of their currency. The kwacha has fallen by 30%. And equally, a lot of negativity here, but the opportunities for Zambia, particularly if they're really resource rich, they're mineral rich. Particularly, can they start to build a nascent emerging manufacturing sector, perhaps producing e-vehicles and batteries? That's what they want to do. And of course, Zambia does have a young, relatively fast-growing population. So can Zambia tap into that, avoid brain drains, and grow on the back of demographic dividends? There we go. Look, I hope this was useful. Zambia, I think, is quite an interesting country just to think about as part of revision. It's a country which is growing, but the growth is hampered. So too is development by a whole series of issues. If you found this case study useful, please consider giving it a like. I'd be super grateful. Either way, stay happy, stay healthy, stay curious, and see you sometime soon.